Jeff Sanford. We're here at the Canadian Business Economic Outlook 2009. And we're here with Benjamin Tao, Senior Economist for CIBC World Markets. You mentioned that this is going to be the worst downturn since the 30s, but it's not quite 1929. I wonder if you can go into that distinction, if you can.
Yes, because people are talking about 1929, and rightly so, because this is a major slowdown. But if you look at the numbers, for example, 12 months into the Great Depression, between August 1929 and August 1930, the unemployment rate was already 25%. Today in the US, it's 6.5%. The money supply back then was down 30%. Now it's up 16%. House prices were down by 30%. So you really cannot compare the magnitude of the problem. However, this is by far the most significant crisis since 1929, but it's not 1929.
Sure. Similar in a lot of respects to what happened in Japan in the 90s, and that was something you brought up out there. I wonder if you can just draw some of the similarities.
Yes, that's actually a very legitimate question, because as we know, Japan is now basically celebrating its fifth recession in 15 years. This is an economy in depression, and some people saying maybe we are turning Japanese. This is a very legitimate question. The difference between Japan and the current situation is that we have learned from the mistakes that Japan made earlier in the decade. Why? Because back then, they basically were raising interest rates early into the slowdown. They were basically committing a monetary policy error. They basically raised interest rates. They removed liquidity from the market. It took them about 5 years to take interest rates down to 1%. The Fed is already at 1% after 1 year, and they are doing much more than Japan did during this time. So what I'm saying is that if we don't move, if we repeat past mistakes, then yes, we will turn Japanese. But the good news is that Bernanke, being a student of the 1929 depression, realizing that every economic crisis was helped, if not triggered, by a monetary policy error, he knows that we have to use all the ammunition, and they're doing it.
Let's move over to the stock market. That's something everyone's talking about right now. And you mentioned we might expect some kind of mini rebound maybe through 2009, but it doesn't go back to the records we hit before, and we kind of have a bit of a sideways market?
Yes, I think that's the way I see it. If you look at the situation, I think that there's always overshooting. There is no question about the fact that the stock market is cheap now, but it can get cheaper. We don't see really all the necessary conditions for bottoming out. So I would say that yes, the stock market probably will continue to go down for the next few months. But remember, the stock market is a leading indicator of the economy. The stock market went down well before the economy, and it will recover before the economy. If you believe that the economy will recover, let's say in the second half of 2009, then between now and June, you will see a mini recovery in the stock market. However, it will be really, really naive to expect the stock market to go back to what was before, because quite frankly, this is a major crisis. You cannot undo 15 years of mismanagement in only 2 years.
Certainly, certainly. So let's talk about a recovery. You talk about maybe late 2009, but it's going to be a slow recovery. It's not going to be a boom right back.
Yes, we have to remember that the trigger for this recovery will be all the fiscal stimulus and the cut in interest rates that we are seeing now. So it's really going to be a little bit of artificial recovery with governments lifting the economy in the second half of 2009. You cannot sustain this kind of recovery. Therefore, it's possible that we'll see kind of a W-type recovery going down, up a little bit in the second half of 2009, and then down a little bit, and then we'll stabilize there. So I don't see a huge V-shaped recovery. I don't see us going back to 3, 4, 5% GDP growth for the next few years. This is a major crisis, and it will take time to undo.
Sure. I hear a lot of people talking about infrastructure. That was something you mentioned in your talk. That's going to be a big sector in the years ahead, isn't it?
Yes, we have been bullish on infrastructure for the past 2 or 3 years, and now I'm even more bullish. I think that if every crisis has opportunities, this is one opportunity, because first of all, governments are spending on infrastructure like there is no tomorrow, and we are in an infrastructure deficit. In Canada, $120 billion of infrastructure deficit, rising by $20 billion a year. So clearly, you have a situation where you can basically spend money and basically buy jobs by creating infrastructure projects. By doing so, you are creating jobs, but also helping our infrastructure sector. I think this is a win-win situation. And if the government is buying jobs, basically, I would like to be investing in those companies that are being paid to create jobs. Those are infrastructure engineering type jobs.
Sure, sure. Let's just talk about some of the quickly one of the threats to a possible recovery, and that's a little bit of trade protectionism going on, and especially around what we need to do about carbon. And you mentioned an interesting term, carbon tariff.
Yes, it's possible. You know, we have Obama now as the new president starting January, and he's definitely looking at a situation in which the unemployment rate in the U.S. will be rising. Clearly, there will be more calls for protectionism, and I think that Obama probably will be open to some sort of a fair trade. And if that's the case, you will see a little bit of a tariff on China. How can you do that? One way is that the Obama people are talking about is via a carbon tariff, because 1/3 of the increase in China's emission, which is half of the global emission increase, is via export to the US. So therefore, you can introduce a carbon tariff on this export, and by doing so, you're basically protecting the environment, but you're also protecting jobs. And you know what people say about free trade? Free trade is like heaven. Everybody wants to get there, but not too soon, So the way I see it is that I think you will see the rise of protectionism. A carbon tariff might be an excuse to this kind of protectionism. Whether or not it's good, it's very, very, very difficult to say. We have to remember that after 1929, we had a major increase in protectionism, which was the source or the trigger for a slow period of economic growth. So we have to be careful there.
Absolutely, absolutely. Thank you very much for being here. That was Benjamin Tal, Senior Economist for CIBC World Markets at the Canadian Business Economic Outlook 2009.